What's up with YouTube? What's up with the fam? Wherever you are in the world, whenever you're watching this, may God bless you. For me, today is Monday. Uh, it's the start of the trading week. It's a short week because we have a day off on Thursday. It's Thanksgiving. And today we got an L. So I'm going to be breaking down my losing trades. And at the end, I can give you some psychology hacks on how I deal with losing. But for now, we can go into the trade. Typically, I don't trade on Mondays, but given the fact that we have a day off in the middle of the week, and also last week I didn't trade on Friday, so there's 3 days in between the last trade I take. I wanted to be present for the market to to see if US 30 would show us some juicy setups, and it did. But the reason why I don't trade on Mondays, I try not to place trades on Mondays, is because it's a calibration day for me, especially after a 3-day weekend. I like to come into the charts and sort of, sharpen my edge for the week. So I don't usually take trades, but either way, I'm prepared. I'm present for the day on Monday, and I'm reading price action. And as a smart guy and a really successful trader and YouTuber always says, Monday sets the tone. Shout out Chris Sang. Appreciate you, big bro. So I wanted to be present for the market just to set the tone for Monday. And unfortunately, we got an L, but we did get our calibration. So let's break down this trade. I started off. We're gonna skip the 4-hour time frame, but we're gonna break it down from the hour and then go top down. So I'll come to the market at around 7 o'clock. So when I looked at the 1 hour, I saw this, and I saw that from Sunday night, when the market first cracked open, we gapped all the way up to our previous high. This wasn't here. So this right here was where the market ended on the day. Actually, it was that line. It was about right here. That's where the market ended on Friday. This line right here is all-time highs before Friday night or Sunday night. So the market completely gapped up and opened at all-time highs. So you can see this huge gap that it made. As soon as it was open, as soon as the market opened, it was above all-time highs, and then it closed on the hour right around here. And then you can see we had this bullish arcing structure going into London, and right at London open, we bounced out. You know what I'm saying? We moved out, and at some point we did come back to retest this demand that was created at London open, and then into US Open. You can see we went and created a new high, and then we rejected off of this new high at NY Open, which is when New York session begins. And then the hour later we start to pull back. So when I go to the 30-minute, I'll mark up my charts on the 30-minute and the 15-minute. So I'm looking for, I know we're bullish, so I'm looking for demand. We have a pretty clear demand zone right here. You can see this is where price is moving out to create all-time highs, and at the same time it's kind of respecting this level of support right here. So this is a very valid level of demand, and you don't have to be perfect with it, but you don't have to be perfect with it, but that's what it looks like. So we got a 30-minute demand. And then I go to the 15-minute, because I between the 15-minute and the 30-minute is how I mark up my zones. Actually, let's go back, because I saw there's another demand right here. There's another demand right there on the 30-minute. So these two are valid. This one especially, because it had broke and retested, and this is initially where, and it retested the lowest point of London. And this is initially where price moved out. And then this pullback was just like a little cooling off point. And then this rejection is the retest of this area. So then I'll go back to the 15 to make sure that these zones on a 30 minute are accurate. And you can see the same area of price right here is present on the 30 minute as well as the 15 minute. And likewise, it's one candle on the 30 minute here, but it's two candles on the 15. And that's pretty close. You know, that's pretty much what we're looking for. So I have my market high marked out. I have my areas of demand marked out. We should be good to go. And what I typically do on normal days where we don't trade all time high, is I will also mark up supply. But it was pretty clear that the market was in the uptrend. And going back, I should absolutely have marked up our only valid level of supply at this point, because essentially that's what cost me my trade. And at the end of this, I'll explain a little bit more in detail why that was. So now that I have my levels marked up, all I need to do is go to the 5 minute, see if there's confluence from the 30 and the 15 on the 5 minute, and wait for my entry model to appear and in my trading window, which begins at 9. So go to the 5 minute. You see there's a 5 minute demand right here. So I did mark this 5 minute demand. It's a pretty huge one. I don't like the big demand zones, but again, if it's valid, gotta mark it up because it will come back to bite you. And again, we'll see that happen later in this breakdown. So there, another 5 minute, which is also in confluence with this one. So these two are right inside of each other, but they're on top of another and another. There's one down here. So this is market low down here. Now, on not every day we come to, and when I say market low, I mean NY or London low. It's not every day where we respect the absolute low. Well, let me rephrase that. We always respect lows, but when we do, it's not every day that we respect it more than once. So you can see we had already tapped into it right here. So there's nothing wrong with expecting this to be the new low, except for the fact that it might not be. So sometimes I indicate these as, and because we have demand stacked on top of each other like this, you know, I'm not expecting this to hold up. I'm keeping my eye open, but sometimes it doesn't hold up. So a lot of times what I do is I'll indicate this as liquidity, because it is. A lot of buyers are stepping in at this point, but we already made our move. So it is valid, but it may not be the strongest point of demand. And that's the same thing that's true down here. So anyways, we're going to see what happened with this trade. So you can see we have a break to the downside and a retest and a beginning of a continuation move to the downside happening. So, and it's also, about to be 8 o'clock. So I don't trade until 9. I make sure I don't place trades until 9. So I know the reason why I don't do that is because I know that these corrections tend to happen between 8 and 9, or really it's like 7 and 9. So I'm waiting for the correction to happen, and I'm waiting for it to respect the level of demand. So what time is this? This is 8:35. You can see that we're pulling to the bottom of this demand zone. And right there, all this is gone now. With that move, we broke below that zone, and that's as expected. Simultaneously, we're respecting this 5 minute and this 15 minute, which is also a 30-minute zone, and we're pulling out, right? So I saw that, but I know to wait for 9 o'clock and to wait for a retest. So that's an engulfing, but it's technically not a break of structure, right? We have two, basically it's just a double top, but I didn't really realize that. So that looks like a retest, right? It looks like a break and a retest. So then that happened. When I saw that, this is the 9 o'clock candle. I'm green light to get in. That's a bullish engulfing. And, I'm fully confident in this trade, except for the fact that, all we got to do is break this area. And this is a 2-to-1 right here. RR, that's 1,000 points with 500 point stop loss. The 1-to-1 is right around here. And then we can see this move, this candlestick pushed up. And at the very last second, it closed beneath this zone. So I'm a little bit worried, but not too much, because I'm pretty much expecting it to come back down and retest this, because at this point I realized that this was the break and now we need to retest. So what happened next is that massive candle, and within 2 candles after that, my trading day was over. So I was expecting this to be fully respected, but what actually happened is it wanted to respect the lows of the market. So in the market, the day, really, not just the market, but the day. So this was a entry signal. This was the actual retest right here. Boom. And then this was my confirmation. Boom. So this is actually where I should have entered the trade. And then from there, you can see we did more than the 3-to-1, but my profit today was 3-to-1, and it went to 4-to-1. Boom. So we came right back up to the new all-time highs, signaling this does. And going back to setting the tone, this sets us up nicely for tomorrow. Like, we could be either bullish or bearish tomorrow, but it'll be pretty clear if we're bullish, because we'll be above all-time highs. If we're bearish, it'll have respected all-time highs. So it'll be pretty clear. It does give us a good setup tomorrow. I'm fully calibrated and dialed in for tomorrow. So a loss isn't actually a loss. It's a lesson. It's an opportunity to learn. And for me, learning is more valuable than winning. And learning, I mean losing, taking trading losses. Because what happens in trading is once the market establishes its characteristic, it tends to rhyme. It doesn't repeat itself, but it tends to rhyme. So we're going to see something relatively similar to this either tomorrow or Wednesday. And when we do, I'm going to recognize it before it even fully plays out. But going back to the reason why it's important to mark up every zone and showing you the reason why I actually lost. Let's go back a little bit. Let's go back to 7:30 real quick. So I'm going to go back to the 30-minute where I marked up my zones. And what you want to do is you want to mark up your supply zones on the same chart, the same time frame as your demand, and have your stop losses and your take profit on the same time frame, because that's the way that the market is moving. It's abiding by the time frames, typically the 30-minute or the 15-minute. Sometimes on a higher time frame, it's respecting the 4-hour and the 1-hour. You just have to be paying attention to understand where it is on every time frame. It's a lot of mental exercise, but it's repetitive, so you'll get the hang of it. What I didn't do was I did not mark up my supply zone, and the reason why is because exactly what I said. I'm saying, like, it seems like it's too big. But if price is moving, or if it's moving 2,000 points up and down, swinging, then this is actually not a big zone. It just looked like it at the time. So when I come back here to the 5-minute, and now I re-examine price from this perspective, and then I even put my 5-minute here, but I didn't even need to. I don't even think I need to put my 5-minute here, but let's just see, and we can get rid of this for now. Let's just see what happens. There, we pretty much broke the 5-minute. We respected the 5-minute right there. So if this was in my trading window, this would be an excellent trade right there. We have a break and a retest. and then boom. Let's say I was going short 2-1. This on a 30-minute right here, this move. Well, actually, let's keep going. Boom, already 2-1 right there, short 2-1. And now we're at demand. So what I would want to see is, okay, we got a break, or we got a rejection right there. Now we're moving even further down. So this trade could have actually been more than 2-1. But now we have our first entry signal right there, right? Is that good enough? I don't know. Let's wait and see what happens. We already know what happens, but play along with me. I'm playing as if I'm seeing this for the first time. So then we have this engulfing. But if you're looking at this on a 30-minute, you seeing this is a 30-minute zone right here that's being fully respected. And it's also a 15-minute zone, right? This candlestick right there, if I move this up just a little bit, it very much just wicks into the 15-minute. So let's just leave it there for now. And then the next one, boom, on a 5-minute, wicks in, pulls back aggressively. What I should have did was exit my trade right there. And then wait for the actual move, because even from here, it's in solid 2-1. I believe. Yes, it is. Boom. So we smacked 2-1 right there, and it even continues to go down. Boom. Probably like almost a 3-1. But we're bullish, so I would not, unless all I was targeting was a 2-1, I would not take these trades. I would wait for this trade. Right there. It's a clear entry. It's a really easy trade. And then you can see we smack. So the moral of this is to don't ignore any of the zones that appear on the market. Give price action the ability to nullify the zones. Don't write it off on your own. Let price disrespect it on its own, and then make the pivots and the decisions based off of price action. My problem was I got a little too egotistical, and what I felt like was what price was going to do is what I was leaning on, instead of being flexible to a point where price moves and I can make the adjustment based off of what price is doing. So that was a 1% L. I took it on 3 accounts that total. I took one 100K account, one 200K account, and one 300K account. That's a total of $600 or $600,000. Pardon me. So a 1% loss on that is 6K. So I was out about 6K on the day. But my accounts are in good standing. They're now officially in drawdown, I think. One of them is, but the rest of them are around break even. So no big deal. And that's how I transition to the final topic, is what to do when you lose. How do you get over feeling like pure doo-doo after you lose? And, I've won a lot and I've lost a lot. And let me tell you, losing makes you feel like doo-doo, no matter how much money you've made or lost. Is always going to have some emotional impact on you. The thing that makes me more emotional is not just losing trades, is missing opportunities, like not taking trades that go in my direction, or getting stopped out and watching price go right where I said it was, just like today. So I felt pretty felt a little, I felt it, you know what I'm saying? I ain't gonna say I was down or hurt. I definitely felt it. And one of the things I like to do is I like to take a walk. And one of these days I'll take y'all along with me. I live in a beautiful city in the Bay Area. The Bay Area is the Bay Area. It's pretty crappy, but at the same time, it's beautiful. Like there's so many hidden gems. I live in between Oakland and San Francisco, so I can walk right to the Bay Bridge and see pretty much the whole North Bay and the East Bay. So I like to walk there, and I like to get in my quiet place and spend some time with God, which is the most important thing. I like to reflect on my trades, win, lose, or draw. I like to sort of, talk to myself and just decompress from the trading day, because it is stressful, and sometimes it's bad stress, sometimes it's good stress, but it always takes a toll. So, but as it pertains to losing, I like to stress the fact that when you pay too much attention to your P&L and your account balance, that is the thing that gets you the most emotional. Um, you're not. It's impossible to completely remove your trading and your psychology away from focusing on the money, because this is a money game. Uh, at the end of the day, the goal is to make money, bro. At the end of it all, the goal is to get bread. You know what I'm saying? Get chicken, as we say in the Bay Area, to check chicken. Uh, the one thing that makes human beings the most emotional, apart from, you know, love making, is money. So in this money game, you're going to lose, and it's going to affect you because you're playing an emotional game. Now, the master of the emotions is the one who wins. I'm not saying control your emotions. I'm not saying, not have any emotions. What I'm saying is master your emotions. Live in a space above your emotions so that you can observe yourself and you know yourself enough to know why you're feeling a certain way and what your response to that is. One of the things that I do to help myself master my emotional state so it does not impact my psychological state while I'm trading or after thereof is I critique myself. I honestly and unbiasedly, and sometimes harshly when it calls for it, criticize my performance in the charts. Um, and the way that I've done that is I created a system to judge myself accordingly, judge my performance for the day. And I don't pay it, and that gives me the ability to disassociate my my profit and loss or my balance sheet from a win or a lose day. So, for example, today was not a losing day because I lost 1%. Today was a losing day because I didn't completely follow my set of rules and my playbook. Today, I grade myself. So, based off of a criteria that I developed over months and months and months of trial and error, I grade myself, right? It's a 3-prong system, and it's A, B, C, D, or F. It's actually 4-prong. The first one that I use to critique myself is market structure. Did I have the market direction correct? For example, today we're bullish, and I knew we were bullish. I knew where the highs were. I knew where the lows were. I would have given myself a pretty reasonable grade, a B or a A, because I was correct ultimately. The next one is my setup. Now, today my setup would have been not so good. It would have been a D, because I did not establish where supply was, and why we were rejecting. But I also did not establish the correct area of the market where it want to respect on both ends. So actually today, my setup probably would have been an F. But that's the second one. The third one is my execution. Did I enter based off of my rule set? Did I enter too early? Did I enter too late? Did I wait for my entry signal, whether it's an engulfing or break a candle or close a candle? Did I wait for a break and a retest? I didn't technically wait for a break and a retest. I should have waited. So today I would have given myself probably like a B minus or C on my execution. And then overall, if I sum all those up together, today would have been a failing grade, right? So that allows me to determine if I actually lost or won. Because sometimes, like let's say I executed completely. I did everything accordingly. I did everything right, according to my own criteria, and price still stopped me out. I'm still giving myself A's. That's still an A. And that way I don't even have to pay attention to how much money I made or lost. I don't even have to think about it. I just think about like, how can I improve tomorrow? And if there's too many days where I'm losing my trades, but I'm giving myself an A, now that lets me know that my criteria is too soft, and it needs to be more rigid, to catch whatever is actually causing me to lose my trades. And then sometimes I'm getting A's back to back to back, which is the outcome, which is what I want. But I want to continue to grow, and I want to continue to become a stronger human being, first of all, but also a stronger trader. So if I'm doing too well, then I have to make my I have to adjust so that I'm capturing more of the critique that's necessary for me to grow in this game. So that's just a quick psychology hack that I use. That's just for me, and hopefully it helps somebody. But ultimately, what you need to do is you need to figure out a way to disassociate your profit and loss from what is considered a successful day. Because if you put too much emphasis on how much money you're making or losing, you're going to fall right into the psychological trap that is trading. Because the devil in this is emotions. If you are too emotional, you're not cut out to be a trader, because it's gonna mess with you, bro. It's gonna play with you. It's gonna play on your emotions, and then it's gonna be so cold that it's gonna stop. It's gonna take you out or make you think that you were wrong, and then go right where you thought it was gonna go, and then that is gonna make you think that this is a scam. So avoid that. Avoid trading off emotion as best as possible. It's impossible to 100% do it, but the great part about trading is it forces you to become better in your life. It forces you to examine the type of person you are, if you want to be successful at it. So I hope this blesses someone. I hope this is a word for somebody. I want everybody to remember that the power of life and death is in the tongue. Tap in with yourself, check in on yourself, make sure that you are speaking life into your trading and into your everyday life and not speaking death. I also want to remind you that if you didn't know this, but wealth and poverty or lack are spiritual outcomes. So if you want to know which direction you are headed in your life right now, whether it's towards poverty or whether it's towards lack, if you poor, you probably missing something on the spiritual aspect. You need to be stronger spiritual. You need to be more tapped in with the Creator, with God, the God of the universe. And you need to examine yourself a little closely spiritually. I'm not here to preach. I'm here to encourage. So I hope that this touches somebody. I love everybody. Thank you guys for tuning in. Peace and God bless.